Hello and happy Friday, everybody. Welcome to another Chamber Check-In episode from Idaho's only five-star accredited chamber. I am so thrilled today to provide you all with a true expert in the mortgage industry. And today I have Susie Boyle with us today. Hi, Susie.
Hi, Paul. How are you?
Hey, I'm terrific. I see you're in your car. You're probably out doing deals right now. So thank you for carving out some time with me today.
Thank you for having me.
And I know you're not driving. You're parked at a parking lot. So thanks for being safe. Um, yeah. Hey, just real quick, for those that don't know Castle and Cooke Mortgage, or Susie for that matter, I spent a little bit of time on your LinkedIn profile today. And my goodness, what I discovered with the recommendations and testimonials from your clients and your friends was truly elevated. And I just wanted to read a couple just to get us kicked off so people kind of understand the type of leader, the expert that you are in this industry. First one says, wow, Susie is a woman of integrity, top-notch professional who gets things done. What sets Susie apart into a league of her own is her ability to listen and ask questions. She's also outstanding in making people feel valued when she talks to you. You know your presence and your business matters to her. That was one of them. Here's another one. She's not only one of the finest mortgage loan officers I've ever known, but also known as a community builder. You know, Susie, I could spend the entire broadcast talking about these folks that have worked with you over the years, but let's get down to it. Susie, you've been a member of the chamber for years, and in your history in the industry is unparalleled. And these chamber check-in broadcasts are really great ways of helping sharing our member stories, their programs, services, but most importantly, the people. So bring us up to speed, Susie. Tell us a little bit about your background and history of work that led you into the mortgage industry and what keeps you there.
Well, I initially got in the mortgage industry 33 years ago after a personal and professional divorce. I was a single mom, and it was going to be too hard for me to work weekends. So I went into something that lots of friends in the real estate industry suggested that I was already a licensed accountant. And so the numbers part was a no-brainer. I came from real estate development background, so I understood that side of the industry. And I gave myself a year to prove it to myself if I could make it in mortgage originating. And by week 2, I fell in love with it. And I said, I think I've arrived. And my brain loves this. And it has enough interaction with people that my personality loves this. So that was the original reason. Since then, did all the accolades and things anyone would want to achieve in my 30s and 40s, and 15 years as a nationally ranked originator from Idaho before I think most of the states knew where Idaho was. Of course, everybody knows where we are now, but achieved all those. But mostly what I'm proud of is that I had the self-initiative and the work ethic and my Japanese roots from my Japanese mom and my Irish dad to uh, really get self-taught. And so I was the only originator in Idaho to be taught by the VA underwriters before they left Idaho and went to Denver. And then I went down and spent a few weeks with the HUD underwriters for FHA and got taught by them. And so I wanted to learn from the people that were already great experts and had been at it for decades before I did. And then it just helped me there to really understand what goes behind the underwriting of a loan file. And of course, with the advent of technology, I've grown with it over the last 3 decades, from where credit reports used to be delivered to us in person once a week after a week of waiting versus instantly within 3 minutes. We can have credit now in technology. We had the old-fashioned fax paper rates once a week, where today our rates can change 3 times a day in technology. And in those days, a fast closing was 60 days, where now it's 10 days. That's technology. But of course, we've also had the roller coaster, the ups and downs of mortgage fraud and the Great Recession of 2008. And I was very involved with the Department of Finance and helping rewrite legislation to get the bad characters out of our industry. And I said to my peers and colleagues in this industry, I spend time every year keeping my accounting license and my real estate license active, and I don't even use those for a vocation. If I'm going to come back to work, because in the midst of that I had a stroke, survived, came back, and said, if I'm going to come back to my industry that I love, we've got to clean it up because I'm not going to be embarrassed about what I do for a living. So we did. And we embarked on a 7-year mortgage reform nationally, and most states, not all states, but Idaho did one of the most exceptional jobs in reforming our industry. And now we're the 8th strictest in the United States. So if you want to be a loan officer, mortgage originator in today's world in Idaho, you really want to do it, because the hurdles you had to jump through to get here, to stay here, the continuing education, the annual credit reports, you screw up your credit, you're out. I mean, it's quite intense. And the good part about that is, as I look around to most of the colleagues and competitors in our industry and in Idaho now, most of them are seasoned, or they're younger, millennials coming up that really want to do business the right way. They're involved with organizations like yours, with the chamber. They're involved in the community. They're involved in philanthropy. And as a boomer, I always say the millennials are going to save us, no, on so many levels. But if you're a consumer advocate, you're still in the industry, because if you got in the industry to help people not only achieve their dreams of home ownership and stability and building wealth through real estate and having a secure asset and home for your family and memories, and you were a consumer advocate to start with, and you got in it for that reason, like so many in my age group did in the 80s and 90s, and not for the money, because guess what? In those days, we made $50 a loan, not thousands of dollars a loan. And so you're probably still here, or you've been fortunate enough to retire. I hope that I have at least another decade to go, because I am passionate about what I do. I love what I do. There's nothing more gratifying than getting a veteran who served our country that 8 banks or 5 banks said no way, and we get them into a loan and closing in a month, or a young couple that needs shepherded and coached and how to get their credit to a place and their finances manageable and budgeting to where they're ready to, and have earned the right, really, to home ownership. And with my accounting background, I chose to make a niche real early on with self-employment, because I figured out very quickly in the business that most loan originators do not understand complicated self-employed tax returns. I don't mean just a small mom and pop tax return. I mean complicated ones. So I chose to make that a niche right out of the box. So that served me well. My dad was Air Force. I was born on an Air Force base, so I'm passionate about veteran loans. And mostly, I've been very, very blessed to live all but my first year of my life in Treasure Valley, Idaho. So I want to continually give back to this great state and city and community that's given so much to me on so many different levels and planes, and doing my best to stay healthy post-stroke and be relevant for as long as the community tells me I'm relevant.
Wow, Susie, what an incredible story. I had no idea how in depth and why you stay in this industry and why it's important, and how you help. Today, you are the branch manager of a Castle and Cooke Mortgage Center. Tell us about Castle and Cooke. What drew you to them? And tell us a little bit about their origin story.
Well, after the great crash of 2008, I went to work for other companies, and I had been self-employed for so long and a partner in a great company for a long time. And I did what I had to do to get through that. But I recognized real early on, I'm not good being a part of some huge 10, 15,000 person operation that operates all over the nation. I want to do business Boise way. And I earned my stripes, working my way back from a stroke and after the recession, and was blessed enough in 2018 that Castle and Cooke of Hawaii found me. And I just thank the Lord they did, because it gave me the opportunity to get back out, run my own P&L. It's called branch in our business. Where you're not just an employee, but you have a say, and well, as close as we're going to get to self-employment today, post-mortgage reform. And they were willing to do business the Boise way. They don't just go into markets like most big national lenders and say, we want to be in this market, and then go hire people. They hire the people and then go develop the market. And so it's up to each one of us individual branches. We're a very small family-owned company, less than 300 people, 35 branches. I'm the 32nd smallest branch in Boise. I want to keep it that way. I've got great team, great people, but I don't want a huge assembly line operation. And I care nowadays way more about quality, a streamlined process, making it so easy for our clients that 17 days or 14 days later, they go, that's it? That wasn't that bad. Because it is an arduous, can be very intimidating. We call it financial enema of your life. And so I think that making as easy and seamless as possible for our clients is a big, big deal, especially in today's world. And that's what we aim to strive on all loans at Castle and Cooke. Castle and Cooke has a 173-year history, if you can imagine.
Wow. Wow.
Starting, do you want to know a little bit about that, Paul?
Absolutely. Yes.
So the original ancestors of Castle and Cooke were Captain James Cook, that discovered the Hawaiian Islands in 1865. And at that time, the 5 Hawaiian kings owned all land rights in the Hawaiian Islands. Then after the turn of the century, those original descendants of the explorer Captain Cook started buying up rights to develop the land in real estate. And then those descendants went on to develop homes, during World War II and post-World War II, and then on to do big glitzy projects like Maui and resorts. And every time you or I go to the Hyatt or the Hilton or the Marriott on those big, beautiful resorts in Maui, it's one of those ancestors that's coupon clipping that land that's underneath that hotel. Okay.
Wow.
So in the 50s and 60s, they decided that why are we paying all these banks all this money? Let's do our own mortgage division and lend to ourselves. So that's what they did. And so today, all these years later, they have their hands in a couple hundred companies, Dole Banana, all kinds of real estate, Palm Springs, Scottsdale, you name it. Big time developers still today in Oahu. That's what they're known for, is real estate development.
Okay.
And then the mortgage company is actually one of the smaller divisions now. And the patriarch of that of the mortgage division, David Murdoch, just turned 100, and he just sold his interests out into a private equity fund. It's still a family-owned company with private equity behind us, so we have the ability and capability to compete with big banks because we'll never run out of capital. We self-serve service, it's called, our own conventional loans, keep them in-house. We have a portfolio division for things that don't fit in the box. We're not a jack of all trades, but there's so many different types of loan products that we're capable of doing. And we have our own VA department, which is why I've been able to close loans from anywhere from clear to close from 5 days to 10 days to a typical average of 17 days for VA, which is unheard of in our industry.
Wow.
It's typically 5 days. And then because we're specialists at VA, because it's a whole department that just does VA. And then we have non-conforming loans for self-employment people that don't fit in the box, variations of commercial loans. There's a lot of things that we can do, a lot of things in our wheelhouse. But what I love the most is the culture, the family culture, the philanthropic culture, investing and giving back into your communities. Finally, after a decade, I found a company that their morals and their values and what they want out of life and their career aligned with mine personally. So it's been a great marriage.
Wow, Susie. Thanks for that story. I had no idea. And I that's why we do these broadcasts, are to help others understand the background and the origin stories of our chamber member businesses. What a great story. And thanks for sharing that so eloquently. Um, while we have it, we only got a few minutes left. I don't want to take much more of your time. Give us a little market report. What are you seeing out there? The mortgage industry is a true litmus test for our economy. What are you seeing out there, Susie?
Well, after a decade of low, inexpensive, cheap money, sometimes almost free during COVID, it was government subsidized money for mortgages so that we wouldn't crash in the real estate market again. Because if we did, we'd most likely have been through a depression. And we didn't, thank God. So those policies worked during COVID. But guess what? We got to pay it back. So in the Federal Reserve's efforts to tame inflation, which we've all known what that's about the last couple of years, they started rising interest rates at a rate we have not seen since 1994. And we went from 2.8 interest rate to a little over 8. And of course, that stifled the real estate purchasing power, especially with today's highly elevated prices in all of the desirable real estate markets. When a starter home in Ada County goes from 275 to 500 in just a matter of a few years, I mean, that's crazy. But it is the cost of what it costs today to build a home, and land costs and supply costs, labor costs, everything has had inflation. But our local wage base hasn't kept up with that, obviously. And when the money was affordable at 3 and 4%, people could still buy. But when it's 8%, now all of a sudden we've got a whole generation, 2 generations of first-time home buyers that can't afford to buy, have been forced to rent. Fortunately, it appears that policy's over and the markets have responded well since November. We're back in the 6% range, 6.5, 6.8. And that's just by the markets. The Federal Reserve hasn't officially dropped the rates, the cost of money. Everyone's hoping that sometime this summer or this fall, they will slowly start dropping them. Most economists agree 2025 is going to be when we really start to see, if we're fortunate.
Well, we just lost Susie there for a minute, but wow, what a great report so far. When she clicks back in, I'll bring her back on the screen. But for those listeners out there that are looking at connecting with a mortgage leader, Susie's one. I'm just learning so much right now. And she's popping in right now again. And hopefully we can hear a little bit more from her. And as you're thinking about purchasing a home and you're choosing that real estate lender or that real estate professional, it's important to know who your mortgage lender is going to be. Get pre-qualified before you even start looking nowadays. And with that, I'm just going to conclude by saying thank you to Castle and Cooke for being a community supporter and investor in their local chamber, which is the Boise Metro Chamber. Susie, we'll bring you back on as soon as we can. But until then, have a great weekend and look forward to our next conversation.